Hi everyone, Chad Shoop here, the editor of Automatic Profits Alert. And today we're going to talk about tariffs because that's what everyone is talking about. It's a very big topic in the markets right now, and it's creating a bit of volatility for us. So what is the big deal with tariffs? Now everybody's focusing on trade wars and how that's going to escalate from us slapping tariffs on steels and aluminum and how other countries will retaliate. And that is important and that is a big deal. But I'm going to talk about whether or not these countries retaliate. Tariffs are still bad for our economy. And it's a snowball effect that it's going to create. And that would lead to a catastrophic event in our economy. And it all goes back to our government debt, which is over 20 trillion at the moment. And this doesn't get brought up enough, but that is a big problem that we're going to have to deal with at some point. And if you start implementing these tariffs, then the snowball effect is going to lead you to where that 20 trillion is going to be such a burden on our economy that it's going to cause a significant recession, probably a depression, in the next several years. Now, how do you get to that from tariffs? Well, if you look at tariffs, it's slapping higher costs on people that are exporting those goods to the United States. But those costs are going to get passed on to the consumers. So what it results in is higher prices for the consumers. Now, inflation is just a measure of prices. When inflation is going up, it means that prices are rising. When inflation goes down, it means that prices are falling. So as inflation goes up, we have a tool to combat our prices to kind of keep them stabilized, I guess, in our economy. And we use the Federal Reserve uses interest rates to do that. So how that works is the Fed, whenever we have high inflation, the Fed will raise rates to temper that inflation, to kind of slow our economy, to cool it off a little bit. Now, if we have low inflation, then they're able to stimulate the economy by keeping rates low and trying to get more inflation in the markets. Now, tariffs with higher prices create higher inflation, and therefore the Fed would have to react with raising rates a little bit quicker than they are now. When the Fed raises rates, let's say they get back to a normalized rate environment that we have seen over the last 3 decades. What that would result in is interest payments on our government debt approaching $1 trillion. That's $1 trillion just to pay the interest on our government debt. That's enormous, okay? Now, right now it's about 200 and some billion dollars that we have in interest payments, but our government debt rolls over every 3 to 4 years into new bonds, into new treasuries. So when it does that, it's going to be rolled over into the higher rates as the Fed has to increase rates. So this is kind of a side effect to tariffs, and of course, small tariffs that is not as broad in the effect as what Trump has already announced would be much better than his announcement. And I think he is going to tone it down a bit before he actually signs it into law. But this is the risk that you're struggling with, and this is what can really snowball from just the tariffs on steel and aluminum imports from other countries. And then bam, this snowballs into higher inflation, higher interest rates. Then all of a sudden, our government's debt is unmanageable. It's so enormous that you're paying approaching $1 trillion just to pay off the interest on that debt. So that's unsustainable at that point, and there will be a day of reckoning to follow with that, and then likely a recession or a depression will begin immediately. But hopefully cooler heads will prevail. Hopefully Trump will look at all this. He knows what's going on. He knows the risk with tariffs and what it could start. And that he has the right frame of mind with it, is that he's trying to protect American jobs and kind of hit back at the manipulators in the global trade market. And that's perfectly fine. But I think what he's going to do, he's a big talker, and this is going to create dialogue with other countries, with NAFTA, with our Canadian and neighbors and Mexican neighbors down to the south. And it's going to create better dialogue to where we'll get better trade deals overall. So hopefully that's the positive outcome that comes out of all this, but the risks are there and the risks are big. Now, if he does go through with the higher tariffs and it does, spook the markets at first, I don't think the sell-off will stay for long, because you don't see the tariff impact right away. A lot of these steel, aluminum contracts, they're there for a year or so they're not going to feel the immediate effect of prices, but our American steel and aluminum manufacturers will see the benefit. They'll start hiring. They're able to increase prices, so that'll be good for them. But the effect in a bigger sense, to where it shows up in the economic data as higher prices, will still take a year or two to play out. And at that point, the Fed will be behind the curve, and they'll be increasing rates at a faster pace. So we're still looking at about another almost 3 years before the whole snowball effect actually takes place. So I don't think the bull market is over, even if tariffs are announced. And if they are steeper than expected, I still don't think the bull market's over just yet. And that's just because it takes some time to show up in the data. So I think as investors see that it's not showing up in the data right away, we're still getting all the positive effects from tax reform and from kind of this protectionist policy that you'll get in the immediate term. But as it starts to show up a year or two later, that's when the real snowball effect shows up, and that's when stocks will really sell off. Well, that's all for my video today. If you enjoyed it, be sure to like the video, subscribe to our page, and until next time, I'm Chad Shoop with Automatic Profits Alert.